Hi guys, welcome to SK Talks. So, 2 weeks back, one of my friend colleague he asked me, every market is doing good, but what is happening in Indian market? So I thought, okay, let's analyze and see what is happening. So as we can see, since the start of the Iran war, almost we can see since April, the Brent oil it is hovering about $100 and above. And that's why, as per conventional economic sense, as taught in school and colleges in India, our equity market should go down. And you can see Nifty almost mirroring that in reverse order, the oil. And that is fine. But look at US market, S&P 500. It is at all-time highs. So what's the fundamental difference between two markets? Let's dive. AI. AI is the difference between two markets currently. US is undergoing an AI investment cycle, AI infrastructure build out, and the AI adoption is accelerating at a very fast pace across the industries. As you can see, Philadelphia Semiconductor Index, it is up almost 60%. Nvidia up 36%, but this is just before the results are reported and it will go down a bit. Whereas in India, we are still more traditional sector backed. Energy and consumption affects us a lot. We are highly sensitive to oil prices, which leads to inflation and interest rate fluctuations. But the primary reason when I see in future, it is low exposure to AI, semiconductors, and deep tech as an industry in our nation. So currency, the first point, Indian currency is depreciating right now. It has almost reached 99 INR to USD. So we are at a record low right now. Why? Because of the fuel prices, depreciation is happening. Because of that, FIIs are net sellers right now in India, whereas USD, a global haven, strong economic cycle, earnings are good in S&P 500s, and capital flows they always prefer US assets. Almost $30 billion of FII money it has driven out of India in last 3 months only. Oil. We all talk about war and oil impact, but why such unequal impact? Look at US. It is a net energy exporter. Because of shale technology, its domestic production it is better suited to nullify any kind of oil shock. Whereas India, we export 80% of crude oil, higher oil, which leads to higher inflation, which leads to corporate margins that are low, and it also affects our balance of payment positions. So, what is the way forward? I know the US market, they are taking geopolitical tension and war as a short term disruption. They are looking at future. Whereas our Indian market, we are taking it very badly because we are still a market that is affected by oil, rising inflation coming from it. Where US AI led growth cycle, strong earnings, safe haven, and the valuations are innovation driven. Everybody is running after tech. In India, currency is at historical low, FII outflows, earnings are also under pressure. So, okay, that thing will pass with time because I think within 2 3 months this war will be resolved or some kind of balance will be restored. But I think going forward, we should invest heavily in AI infrastructure and deep tech because the future of all the whole globally actually it is moving towards AI deep tech And India, we should invest in these things, and our companies should be there, so that our market should have huge AI and deep tech players. Hope you like the analysis. Thank you, and do subscribe to SK Talks. See you soon.